What's up, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. It is September 27th of 2022. Hope everyone managed to survive today's trading session. Let's go through our box scores as we always do. First thing I want to point out is I really appreciate you all for watching these videos, and I thank you so much for your feedback. If you have any ideas for how we can make these videos better, we got some suggestions about like the mic quality, a few other things like just throw them out there. And also, if you like the video, that really helps the algorithm, all that good stuff. Anyway, let's dive in. S&P 500 is measured by the SPY, finished down 0.26%. This felt like it was 5 trading sessions in one with all the wild moves. Finished up 0.04%. We had our IWM small caps, which finished up 0.34%. Our dogs of the Dow Jones finished down 0.49%. Our ARK Innovation ETF finished up 2.08%. And TLT, which I just added on here, really just to show the stark contrast. TLT, which is the long-term bond ETF, sold off 2.63%. This was well over a 1 ATR move, so that's pretty sizable move there. And TLT is now trading at the lower 3 standard deviation Bollinger Band. Very noteworthy. Volatility was expanding throughout the session. At one point today, the S&P 500 did retest the June lows. We actually undercut them. I believe it was by like, a basis point. It was a super small smidge before we ended up rallying up a little bit higher. But I gotta say, I was very, very surprised that equities held up as well as they did despite this wild move lower in the bond market. So this market, it's like a page-turning novel where, for me, I'm like, why did that happen? And I'm sure we're going to find out tomorrow. Small cap breadth did finish out positive. We had 52% advancers in the small caps. Our up volume finished out the day at 49.4%, not too bad, basically at break even. And the trend model does remain at a -3 reading. Today's economic data, we had so many Fed speakers. It's pretty ridiculous. This is actually, where is this? Yeah, so we had, Evans, Powell, a bunch of stuff. And we had a bunch of these economic data points, and we've been seeing this same darn thing, team. We're getting economic data. The data's coming out a little bit better than expected, and the dollar index will not be offered. It just remains bid every time there's a strong economic data point, and bonds are just continuing to sell off. So we're in this weird situation. I think it would be a big shame if the market is to have some sort of like crash event, which I don't think it's going to. That's not my base case. But the S&P 500 right now, it's down about 24%. If we were to have some sort of like, let's say, heaven forbid, like a limit down event or something of that nature, oh my gosh, market kind of has a spill down 5% in a session, down 6% in a session. Suddenly the S&P is down like 30% year to date. It would be such a shame if the catalyst for that happening is we're just getting some economic data points that are a little bit better than expected. Like, that would be the most ridiculous thing ever. I don't think it's going to happen, but here we are. That's basically the situation we're in. Durable goods orders, month over month, came in at -0.2%. The consensus was -0.4%. So again, a little bit better than expected. This S&P Case-Shiller Home Price Index year over year came out a little bit light, which is good. Again, consumer confidence came out at a 108 reading. The consensus was 104.5. So it's like, oh man, super bearish. Consumer confidence is higher than we thought. It's pretty wild stuff. And then of course we have Daily speaking at 8:35 p.m. She probably has like some sort of speaking engagement. Tomorrow we have another flurry of data. We have retail inventories. We have another bunch of Fed speakers, including Powell, and pending home sales data. So that's also going to be key. The Federal Reserve really wants to see if the housing market is slowing. So again, I would imagine at 10 a.m. when this data point comes out, if it comes out better than the consensus expectation, the market's probably going to take that in a bearish way. If it comes out a little bit lighter than consensus, I think the market would perceive that as good news, as perverse as it sounds to say that. VIX Futures curve is still inverted. So that means we are still in the heart of this volatility event. As we approach the end of September, remember, now we only have A few more trading days in September. We got 3 more days, team. 3 more days, and then we are over the hump. As we move through the end of September, and then this VIX Futures term structure as it uninverts, I think that's a really good signal that the worst is behind us. Today was day 29 of the sell-off. That is pretty crazy. This was yesterday's data point. Advanced decline line hit the worst level on a 10-day basis in 32 years. We keep seeing these data points like worst on record, worst in 30 years, worst since the financial crisis. It's pretty wild stuff. Finviz Heat Map. Tesla was the big standout, up 2.51%. There was a headline that mentioned that the deliveries could be good, like a leaked email, something of that nature. Nvidia was also positive, along with these other semiconductor stocks. Energy was positive as well. And if we look at our sector map, we are seeing things changing a little bit. First thing I want to note is a lot of these sectors are moving on high relative volume, and that's really just, par for the course when the market's this volatile. But look at today's configuration. We had a move out of consumer staples. They were one of the big losers. And then if you look at some of the big gainers, we had biotech was our best performer, up 2.88%. Solar energy up 2.11%. The ARK Innovation ETF up 2.08%. And yeah, software was up as well. So it's very strange. Like the ARK Innovation ETF, which we're currently long, being up while TLT, the long-term bond ETF, was down so much. That is very odd. And it's something I can't really make an inference based off of it, but what I can say is that correlation basically came undone. So either, bonds are going to have an incredible bounce tomorrow, which I think is pretty likely. I saw some buyers step in after the close, or this must be some sort of false start with ARK, but that's not really my expectation. Style factors. Another strange divergence. The growth style factor, which you would think as bond yields are rising, that growth style factor should be underperforming, right? That was actually an outperformer, up a smidge, and then high beta stocks were the best performer. Now, high beta is typically something that investment managers, they veer away from it if they think the market is heading into a sell-off, because remember, high beta stocks, they move more than the market to the upside and the downside. That's why they're high beta. But if you think the market's going to rally, you'd want to be getting into high beta stocks, and that was the best performer for today. So we're definitely seeing some positive divergences just in terms of which groups are moving and the way that they're moving, which is good. I mean, it's day 29 of the sell-off. Like, it's about time that we're getting some positive divergences, you know what I mean? And we're at a point just with market sentiment. We had no options trades today, also no common stock trades. I was just observing the action. We're at a point with market sentiment where, like, if you were to say, oh, guys, I see a positive divergence, like, if I were to put that out on Twitter, I would get like 10 people like, no, the market's going to crash. So I think, as investors and as traders, like, we want to be using data to make our decisions. You'll notice at sentiment extremes, usually people start ignoring data. Like, for instance, the data point, oh my gosh, most put options on record that were purchased. A data point like that, it'll just get swept under the rug. Like, yeah, but the market's going to crash, like, whatever. These positive divergences we're seeing under the hood, same thing. It's like, you don't know what you're talking about. The market's so bad. And that's the name of the game. When you get to day 29 of the sell-off, pretty much everyone is down on their luck. No one thinks the market can advance. And we're getting that mentality right at the seasonal low. The VVIX, this is pretty cool stuff right here. The VVIX was dormant for so long, and this is definitely a learning lesson for myself. I'm always learning as I'm trading. I'm always trying to get better. For a while, the VVIX and the VIX were really just like underperforming while the market was pretty weak. And we sort of had almost like this VCP, like volatility contraction pattern, you could call it. Now we are starting to get the outperformance by the VVIX. Like the VVIX is really moving to the upside every day. And like for example, today, S&P 500 only down 0.26%, but the VVIX is really just flying out. Like investors are definitely just getting hedged. Now they're taking the sell-off seriously, and that's really what you want to see. If you're looking for a market bottom, you do want to see that panic. So that's definitely something where next time around, I'm definitely going to look for more of those signs of panic before adding on really like any exposure. But yeah, it is what it is. It's good that we're finally starting to see it. VIX as well. The VIX is at a 32.6 handle, and this is looking pretty comparable to other VIX spikes. So yeah, like if now you're playing on the short side, basically what you're playing for is I think we're gonna have a market crash and like the VIX is gonna go up to like a 40 or something like that. And it could certainly happen. I just don't really think it's as likely as, a lot of people think it is right now. Dollar index basically put in a flat day. I was watching this for most of the session and it was just kind of like we were fluctuating between being negative, then being positive, then just staying in one spot the whole day. Today was one of those like pressure cooker days where there's just markets moving all around, but at the same time, it feels like nothing is happening as well. Those are often the best days, just get off the desk. Take a look here. What else do we have? Let's go to the indices, and I'll show you what we have going on here. Yeah, it is 6:12, so we can see the beginning of the after hours trading. Look at all of these darn red candles in the S&P. This is crazy stuff. I remember there were a bunch of people saying, the market can't bottom because we haven't retested the June lows. Well, today we did retest them on day 29 of the sell-off team. And look at this. We undercut them by the smallest margin. Look at this. We maybe got 1 point below it, but why were we not able to get any traction below, right? Like I would think market tried to balance in the morning, all of a sudden it starts cascading. Like shouldn't we have just slipped into the abyss today? I really just think like sellers are getting exhausted. At this point everyone's positioned for a downturn. So the fact that bonds had such an adverse move today and stocks really just could not even get any traction to the downside, that also gives me confidence like all right, we're at a place where it's going to take a really negative event, because remember we had GBP, Great British Pound, almost, basically collapsed. Then we had this huge move in the bond market, and we're still just kind of hanging in there, which is good. Take a look here. This is our hourly chart. Let's take a look at where we are. So this is our line for the June lows. Yeah, we just by a smidge, we undercut it. Another day of pretty heavy selling. And look how far away we are from this weekly value area low. I do think if we get a bounce, I think that's really the first target, this 3782.75 level. All right, let's flip over to the NASDAQ. NASDAQ, yeah, this one did not undercut the June lows. This is important. Look at this. You would think if everyone was super worried about inflation, wouldn't the NASDAQ be the one that's the first to undercut the lows? But that was not the case. We could end up realizing in 2020, with 2020 hindsight, that a lot of this September selling was actually tax loss harvesting. That is a phenomenon that happens towards the end of the year. We do know that investors, they have a ton of losses this year. So while everyone's like perpetuating the narrative like, oh, it's because inflation, market's selling off today, yeah, inflation's even worse than it was yesterday. Another day of selling off, yeah, it's inflation, like it's even worse, it's running away. Like we're seeing a lot of that, and it really could just be like a mechanical sell-off, some deleveraging, some tax loss harvesting, some rebalancing at the end of the quarter. I think we're gonna find out in hindsight that like, oh, it actually wasn't a crash, like it was just a bad sell-off. Russell 2000, seeing a very similar dynamic. Again, why didn't the Russell 2000, retrace back to its June lows? It did not. So definitely seeing some areas of relative outperformance. And of course, we've got our Dow Jones. I don't even know why I pulled this one up anymore. Dow Jones did actually undercut the June lows. So that's good. You would think if everyone was hyper concerned about inflation, again, the Dow should be the one that's not undercutting the lows because that one has more exposure to like banking stocks, energy stocks, what have you, and you would think it would be the NASDAQ that is. Also, if you look at the ARK Innovation ETF, I'm heavily positioned in here now. ARK Innovation ETF, we made lows in June, or in May, then we made a higher low in June. We have not retested either of those levels. I would think ARK Innovation ETF should be the first one to do that, right? But it is not doing that. I think we have a pretty big day in store for the ARK Innovation ETF, probably on the first day that bonds don't just get absolutely destroyed. Also, we are seeing some of the leading stocks, which I am still long. I'm not like one of those people that went like all in cash. I did earlier in the sell-off. Earlier in the sell-off, we were shorting, but towards as we got to these later stages, I started to add exposure. End phase shook out below the 50-day simple moving average. Actually closed above the 50-day SMA today. That's pretty good. It's not like the chart looks fantastic, but all it would take is really just like one nice green trend day in the market for this chart to really repair itself. Same thing, one of my other core holdings, Wolf. This one was up 2.56% today. This chart has pretty much repaired itself, right? Like we made a low a couple sessions ago. Then we've had sort of like this stealthy move higher. If the market just has one good bounce day, I would imagine we're going to see Wolf break right out back above this monthly value area. Same thing, MNTK. It's another one of my core positions. Up 5.31% today. Closed just a smidge below that 20-day simple moving average. This one as well. If the market picks up some steam, could see this one moving to the upside. Another big move for today. I forget if it was AMPH. Or maybe just AMP. There was one stock that one of the guys on a Twitter space brought up. It's another clean energy stock. I forget what the exact ticker is, but we actually had a breakout today, which is, pretty good stuff to see. It's always just like a few stocks that break out first, and then those really set the tone for everything else. And let me see if I can find it here. I believe one of the guys in our group, yeah, AMPS, one of our members, brought this one up as well. Yeah, AMPS, this is a clean energy stock. This one broke out today. So we're starting to see that. So yeah, I think heading into the end of the month, we'll leave off here. We have 3 more days, which I would consider the gauntlet. On Friday, we have month end, quarter end, and we also have PCE inflation data that's coming out. Those are all going to be super important. They're all pretty much wild cards. I think if we can make it past Friday and we get into October, we get to that really good seasonality. We have bearish sentiment, bearish positioning. I think that's where things could get a lot better. But it's all about making it through to that point. So hope everyone is doing well. Thanks so much for tuning in tonight. We will see you all tomorrow.